Today, I do want to go over some technical analysis for the SPY Qs, Apple, Tesla, Amazon, and NVIDIA on a greater time scale like the weekly or even the monthly. But first, I think it's important to give you guys one thing that really separates people and makes them successful when we do see these signals in front of us and there could be a potential crash on the horizon. So what I've done is I've gone all the way back to the year 1999 and I've circled every single time that we have seen the potential for these signals. When these signals are building and when they do confirm, you can tell that we see major downturns in the market. We get big crashes. Sometimes we get pullbacks to, set up and go higher. But for the most part, this is still 20% down. This is still 20% down. This is 40% down. This is 25% down. Every single time we see these signals, we see some kind of big downturn. So what can you do as an American, as a person who trades in the market, as a person who is a part of this world, of the working world? How can you really, position yourself to be successful when you start to see these signals forming? It's important to note that I am not telling you anything that I am not personally doing myself. I am personally doing all the things that I am about to tell you, and I think that it would be very good information for you to have moving forward, especially in the climate that we're in this working world. So what is the number one thing that really makes, puts you aside, and really only 10% of people really do this, and it sets them up for success over years and years in the future? And that thing would be go get a job, go work a job, or go make sure you are high functioning at your job right now, or take on more hours. This is a time where we could see major downturns in the market. And when these type of downturns happen, we see major unemployment. And that is the number one thing that people can do to really set themselves apart. If I told you, if you clicked on a YouTube video right now that said you can make $4,000 in 1 month, wouldn't you click on that video if you really needed $4,000? But the fact that I'm telling you, you can make $4,000 in 1 month if you just go take an extra job, if you make sure you're performing well and do all those things. And like I said, I'm doing all of those things myself. I'm actually taking on more hours. I'm going to be working 50 hours a week. I'm going to have to put out YouTube videos later at night. Some nights I won't be able to, but I for sure will be putting out YouTube videos Sunday, Wednesday, and Saturday morning. Okay, so those are going to be the dates that I for sure will put out YouTube videos. But right now, the number one thing I want to do is set myself up for success. I want to be able to take care of my family. I want to be able to take care of myself, and I don't want to depend on the government. So I am going to perform at work. I'm going to take on more hours for the time being and make sure that I am an asset and really seen as an asset to the company that I work for, so that I can keep my job, so that I don't end up in a bad spot over the next 5 years, because we are seeing these signals right now. I don't want to be one of those channels that BS's you guys. I'm 31 years old. I'm not making an astounding amount of money in the market. This is something I am very good at, but I know that times can be tough and I need to set myself up for my family to progress forward. 31 years old, I'm still building at this point, and I understand that keeping a job and performing well at my job while I'm still young at 31 years old is a very important thing when I see these signals. I'm not doing anything different than I'm telling you. I'm doing exactly what I'm telling you to do right now, and you are lucky because you have an opportunity. We are now living in a country where more people would like to sit on their butts than actually work. People are starving for good workers, someone who shows up to work and tries really hard. You have that opportunity right now, and I highly suggest you take it if you really want to make money over the next 10 years. This is something that I am very good at, but I understand that just being good at something doesn't mean that I am rewarded with all of the benefits, all of the money, all of that. I still have to take my time, because the best way to make money in the market is the slow way, and the best way to get more money into the market is to have a good job. And so I am going to work really hard to keep that job and perform well at that job, so I am seen as a huge asset to the company that I'm working for, so that I can keep that job through tough times. Even if times are good, what do I lose? I don't lose anything. I gain more money. I have to work a little harder, and I set myself up just in case something bad happens. I wanted to make it clear that I'm not hoping for some kind of big crash. I really do understand that people lose their jobs in crashes. It is not something to celebrate. It is something to be weary of and position for. And if people would have seen up in here, we see all these divergences on the monthly back in 1999. We actually built these divergences from like 1997 all the way up into 2000 before we saw that big drop. And the thing that I'm telling you now is we could be right in here. We really could go into another bull market where we go higher. I don't see that in the near future, but it could happen. And the good part is if I start working hard at my job here, then I can work hard for 3 years and that company will see me as an asset before some kind of big downturn and I can keep my job. And then guess what? We see that signal again here. We have this divergence between the points up in here. We see that divergence up there on a monthly scale, which just told me I need to work really hard in this area because there could be some kind of downturn. And guess what? The technicals usually do get these monthly and weekly charts right. And when we do see these signals pop up, something in the future is coming. And the fact that we're in some kind of huge debt bubble, we're in some kind of AI bubble, we're in some kind of chip bubble, we're in all kinds of bubble. All you need to know here is we can see some kind of big downturn, and it doesn't matter what causes the downturn. It matters what you do before that downturn actually happens. It matters what you see on the charts in front of you will most likely play out to the downside, and it might take some time, but that gives you time to really set yourself up for success and then buy things at really cheap prices in the future. And I just wanted to take this chance on the SPY to zoom into the now. And as you can see, we have a very large divergence here on the SPY on the monthly. So if we do experience that downturn in the near future, we can get into negative territory and start a negative trend. And the biggest thing I wanted to point out about this is the times that we went into negative trends, you see how far down we came. Right? We were actually able to get into the negative territory. We're actually able to get into the negative territory. We see bigger downturns for a longer period of time. These crashes in here that we've experienced recently, right? Let's say 2018, we were doing some rate raising and things like that. We do see a downturn, but we don't get into negative territory. We see a downturn in 2020, but we do not get into negative territory. Therefore, we don't see more pain for an extended period of time. Now you have a divergence that is setting you up to get into negative territory in the next year or two, and that actually could play out into negative territory. Therefore, we could see an extended downturn over time. Now, I'm not hoping that happens, but I'm making you aware of it and telling you that the overall market of workers do not want to work right now. So if you just go to work, you get a job, and you find something that you can be really good at and show a company you are successful, you make that company successful, you actually will be seen as an asset and you can keep your job through tough times. And if you do lose it, at least you had that job before and now you can position yourself correctly. I'm sure you've seen this kind of stuff before, but the point of this is it's the people who actually do it who do benefit from this information. You actually can benefit from this information instead of watching videos that say, you can make $10,000 this month. I know I've posted things that have said I've made $20,000 in a month, and that's true. I have made $20,000 in a month trading in the market, but that's not all the time. You have to take the good with the bad, and those people have also probably experienced $20,000 losses as well. So it's something to pay attention to, and it really does help to have that cushion of a good job in case something goes wrong, in case you take the wrong trade, in case you get too bullish or bearish at a point and you lose a lot of money. You need some kind of thing to cushion yourself, something to feed your family at the end of the day. So we could be experiencing that because we are seeing the same type of signals that we saw back in 2020. So we need to pay attention to this at this point because we can set ourselves up in the future. And overall, we do have a weekly divergence here. The last time we had a weekly divergence, guess what? We dropped down to lower levels and we have that monthly divergence on top of it. So on this channel, we go over especially in my course, I go over a trading strategy in a bear market where it's if you have a 30-minute divergence, a 2-hour divergence, and a daily divergence all at the same time, it is a very strong signal. And all you need to know as of right now, I just showed you a monthly and I'm showing you a weekly. And right now we are setting up a weekly divergence, a monthly divergence, and we're probably going to set up a daily divergence. And those are 3 big time frames which could lead to a big downfall in the markets over the next few years. So it is a time to really pay attention. It is a time to really focus on being good at work, have a good attitude, because a lot of the people that are joining the workforce today do not want to work. They don't want to work, they don't have a good attitude, and that affects how the company sees them as an asset. And I don't want that to be you. Hopefully you do find that advice helpful. I'm doing that regardless if you like that advice or not. I'm going to do those things. But I wanted to talk about what is happening right now in the market. That's what we really want to focus on going into next week. We can really see that we do have this weekly divergence. And if that does play out and we're able to break through this channel, we could see a downturn for an extended period of time, and how that might play out if it does break down. I really like this level down here of about 410, 409. And you can see if we did head to lower levels and break this, we could be bouncing up to get some kind of retest. We could bounce up a little bit higher, get some kind of, one of those squeezes in the bear market territory that we've talked about, and then break down. And what that would do is set up some kind of big head and shoulders. And then we could see the market head to lower levels. And all of these things are why I gave that big rant in the beginning of this video. I think it's very important to know that the best way to position yourself before some kind of big downturn, not only in the market itself, I think it's really important to focus on what you can do in your everyday life. And that is keeping a good job and make sure you're performing well. The reason that I'm really focusing on this area right in here, okay, this area right in here, is because what happens around this area, earnings, and the fact that we just had the last quarter, the fact that we just had, Christmas, all those kinds of things, maybe we actually do have some good earnings coming, and we do see some kind of selling in January with profit taking, with the wake up call, with the rates and things like that we've discussed on this channel a lot. The fact that we're pricing in 175 basis points at this point, but the Fed might wake us up next week and tell us, hey, we're only doing 75, and that actually could pull back the market, and then maybe we do see a push with earnings. That is overall what I see most likely happening in this scenario, but I'm open to every single scenario. I follow prices, right? That's why we give a bullish and bearish take at times like this, because we need to be open to both scenarios and move with price at the end of the day. If we did get this second push up, that actually would set up a good daily divergence. So then you would have a daily divergence, a weekly divergence, and a monthly divergence at the same time, which can really hint you that something bad is coming over the next few years. Going into the daily, we're going to talk a lot about this on Sunday, so join us back Sunday night for our Sunday video. It's very good because we will be giving you those updated weekly ranges, and we'll even give you the updated monthly ranges for the week ahead. Okay, so we want to pay attention to these types of things because we've actually closed outside of these monthly ranges for a couple months now, right? We actually closed outside of that range to the upside here, and then we close outside of it again right here. And that is very interesting. That doesn't happen a lot, and that is why I said, this could be very dangerous. If you followed my channel for quite some time, I was not rooting for us to have some kind of crash. I overall was saying, I just wish we had more structure because that would convince me a crash is not going to happen, maybe for a little bit more time. So what we were saying around this area was this is a great place for us to pull back, gain some structure, and then start to head higher, get some kind of retest, start to head higher, and you want the market going up kind of like this, where there is periodic selling, and then we see that gradually go up. But the fact that we've exploded higher with no selling, and then we explode higher again with very little selling on light volume going into this last week, and the week to this next week actually will be low volume as well. So we need to pay attention to that. This actually could next week go even higher, get that all-time high narrative that we've been talking about, and then we see that profit taking come in before earnings. So I really want to pay attention to this at this point, because if we wanted to see better structure, you want this to have good structure so that we don't see some kind of bigger downturn. The further you go up and up and up, the more that you get those retracements, the further retracements you get. And that's why people really like when you do see a market kind of like this, where you can swing trade your way up. So it's a point in time to pay attention. On the MACD down here, we actually did cross on the MACD on the daily. So that is something to pay attention to going into next week, as there will be light volume. We see that we're getting out of that overbought territory, coming back down into the above the center line territory here. So if this does want to be some kind of pullback, right, we'd want that to remain above that center line on the RSI. So we want that to remain above the center line, but we do see divergence up here on the RSI. It's not on the MACD at the same time. So that's something to pay attention to. And maybe we do see, this can play out in a million different ways, but that's why you follow price. If we do see us base out around here and then get that all-time high, that would make some sense. If we did want to start to sell off all the way into January and then see that start to rise back up, that would make a lot of sense too. I really do still believe that we have that good probability of getting that all-time high before we see a more dramatic downturn this coming year. Now, this here is a monthly chart for the Qs, and you can see we do have that potential divergence setting up as of right now. That hasn't crossed. We can still see some kind of, bull market out of this. I'm thinking that this is coming down, though, because we've actually reached that negative territory once. When we do reach that negative territory and pop up into positive, if you do curl over, you're most likely cutting out this low and making a new one. And you notice our trend line is right around, if we go with like a timeline here, it's right around that low. So if we wanted to make a lower low, we would have to break that trend line. That trend line is very important, and we could see the Qs heading down to somewhere like 180, 200 before this actually does base out. So it is a time to be very, very cautious over the next few years because we see these signals. And as we go into the weekly, you're going to see that we are setting up that divergence at the same time. Okay, so we're setting up that divergence at the same time. Like I said, come back on Sunday because we will be giving you those new weekly ranges for the week ahead. We'll be giving you those monthly ranges for the whole month of January. And those are very important to pay attention to. When you do get outside them for 2 months in a row, it's very good to pay attention because you could be landing back within those, because it's 68% of the time that you do land within these zones. The fact that you had 2 months before that landed outside of it means there's probably a good chance that you do land back in that zone the next month. So come back on Sunday for that. Now, that just tells us there could be some kind of dramatic drop, but maybe within the month of January, we get towards the bottom of that monthly expected move, and then we see some kind of, move upward. We could see a move outside of that monthly expected move, and then we start to move upward to close back within it. And that's really why I'm leaning towards another push in 2024. And the thing about that second push that I didn't go over in the SPY with my lines that are kind of like this, around this area here is March, and March is when we are supposed to get our first rate cut. So if people wanted a buy the rumor and sell the news type of deal going on, then we actually would buy into the fact that we are getting some kind of rate cut. But when that rate cut happens, we could see that uninversion of the yield curve, and that actually leads to recession. So we actually could see that be a bad thing for the market, meaning sell the news. See that divergence on the weekly here. So if that does roll over, we're very close to that negative territory. So we don't have to make that daily divergence too. This could be all that is in this market at this point. We could not reach that all-time high, kind of like back in the tech bubble. We actually could see us, like in 2000, we came up to an area, we saw a downturn over some years, and then we built back up, and then we saw that downturn again with a barely lower high. So we want to pay attention to that at this point, because we did not, well, on the Qs, you did reach an all-time high, but I'm saying this more about the SPY. We could see this right now. So you really want to pay attention over the next few weeks if this is able to curl down and confirm on the MACD, because that may be a signal that it's actually going to crash very, very soon. Now on the daily here, we just wanted to point out the Qs. They don't have that divergence. I mean, I wouldn't really this is a very flatness of the MACD, so I don't really want to consider that divergence. You got that crossing on the MACD as of right now. So it means we could get some kind of pullback. And the fact that we've gone up so high without so much structure means we can cut through areas like butter. So if we do cut through this area right in here, right around that 403, then you actually can see us go down to the next point where we do have some of that liquidity, which would be right in here. And it's from this point we would want to pay attention. Is the MACD able to roll up and remain in positive territory? If it's able to remain in positive territory, we could see another high in the Qs come down to this level, pop back up, and then we see people get excited with those rate cuts or anything like that, and then we actually see the rug pulled. So we really want to pay attention to this going into January, because we have gone up so fast without much structure. So if you break below this level, you're most likely heading to the next liquidity zone right in here. And if we break through this level, you're most likely heading to this area in here. So we really want to pay attention to right in this area. If we do break below this liquidity in here, I'm really leaning towards us breaking down to that liquidity and then seeing some kind of upturn and getting another push higher into the March territory. Now, I told you, you want that date, you want those divergences at the same time. So on the bigger time frames right now, you have a monthly on the Qs, you have a weekly divergence on the Qs that are setting up, they haven't confirmed, and you do have right now a daily divergence on the RSI, but not the MACD at the same time. You have this flatness, even a little bit up, I would say. And so I'm really thinking that we do get one more push out of this. Now, I don't have to be right, and I'm going to be paying attention to those weekly signals. But if we do get some kind of downturn and then we roll back up, that would really be telling that we are going to see an all-time high in the SPY. We're most likely going to make another point of reference in that divergence, and then we could see the rug pulled in the future. So we really want to pay attention to this going into 2024. The signals are flashing, and it tells you it is a time to be very cautious. We've been telling you to be cautious ever since we got up into this area, really. Every single time we've broken through new points of interest and didn't get a significant pullback to then go up, we've really been signaling, hey, this thing is asking for a big drop to happen, and that could happen in January, and then we could see another push to go even higher, and after that happens, we could be actually seeing a big drop because of those monthly and weekly divergences. IWM, we're going to go over this real quick just because we said that we most likely will come out of this. If you were on my Patreon, I gave you that little notification about that triple divergence on a 2-hour up here, which is something we've been leaning towards. And I overall said it is actually a bullish thing to come outside of this zone. But if we're able to break down below this zone, then my signals would go back to bearish. This is a very bearish bar at this point. You're closing below the 9. You haven't crossed on the MACD yet, but if you get one more day of selling, that most likely will happen. So we really want to pay attention to this. I would really, on the IWM, be paying attention to the bottom of this zone. We do like to use these zones to go higher, but if we break through this level and close below it, it's a good sign that we're breaking this trend and we're actually going to head to lower levels and see some kind of negative trend setting up in the future. Going to show you Apple one more time on the weekly to show you guys how Apple is actually signaling early on that this might want to confirm on the weekly scale. So this is why we've been paying attention to it. We see weekly divergences across the board on a lot of popular stocks and the overall market at the same time, and that is something to really pay attention to. On the weekly side, you are closing beneath that 9-day moving average. So if you do get one more week of selling, or maybe it takes 2 more weeks of selling, you will get that to cross on the MACD. So I'm really going to be paying attention to this 20-week moving average, see if we're able to hold up with that and see some kind of bounce, because Apple, kind of like this purple zone, right? We go into this zone, we pop out of it, we bounce back in it, and then we head higher. That can happen up here again. So we actually can use this to head higher in the future, and maybe around that March timeline, we do see the rug pulled with that yield inversion taking place. So we want to pay attention to that. People will see the rate cuts as good news, and I told you that on this channel. The rate cuts are good news for a short period of time, and when they actually happen shortly after, we usually see a big drop. Now, I don't think we did this for Apple, but I just wanted to give you guys a big thumbs up and a pat on the back if you did find the information about Apple helpful. This was the one stock that I was telling everyone, hey, my signals have turned to bearish on this. We have that divergence, right? We get that divergence up here on the MACD. We get that divergence on the RSI at the same time. Apple was signaling to us, it's a very popular stock, and it was signaling to us there is weakness up in here. And we can see that right around this green bar here, we got that confirmation. I got one more down day to really solidify it, and that's when my signals turn bearish. So you got these Bollinger Bands really tight, and it looks like some kind of explosive move could happen, but that could be a test of the bottom Bollinger. We could head out of that to spread these Bollinger Bands out, come into that 50-day moving average, and see a reaction up. So thank you so much if you are subscribed, if you're part of my Patreon, and you guys enjoy this information. I really appreciate it. But as of right now, we are seeing this kind of like pretty pattern selling, right? Pretty algorithmic selling, not necessarily a dramatic drop. So if this wants to just continue over time, and then we could see that actually broken out of this trend, that actually might be a good sign that we have some bullishness in the near future into that March area. So really pay attention to this going forward. We do like to use these zones to head higher, and I think people will, with earnings and with the rate cuts coming, people will see that as bullish, but when the rate cuts actually happen, I believe shortly after, we're going to see this rug actually pulled. We'll go over the shorter time frames on Sunday, so join us back. Now, you do see on Amazon, we do have this divergence up here on the MACD, right? We have this divergence on the MACD, but you don't necessarily have that divergence on the RSI at the same time. That's overall why I'm saying a lot of the times when that happens, we do get some kind of pullback, and it does have a great liquidity zone right in here. So I would really be looking for this area of about 143.50 to break and close below, which is pretty easy because the 50 is right there. So if we start to close below the 50, that may be a very bearish sign, and we may be going to test the bottom of the channel that we're in at this point. So on Amazon, it's very good to pay attention to. I still think Amazon does have a chance to head a little bit higher, pushing the SPY higher, getting to that all-time high so they can really get that narrative in, get every single bear out of this market before they actually rip it from you, before something bad happens and we see some kind of rug pull. So you could look for Amazon to head to lower levels, bounce off its 50, head a little bit higher, and maybe set up some kind of divergence into March. Tesla, we were doing good on this because we overall said it's most likely we're going to get out of this, which is kind of a bullish thing, but look for that to fade, right? So look for that to fade in the near future. And guess what? It faded that day. So the second that this started to happen, we started to notify you. I believe I even put it on Patreon. I'm not 100% sure with this one, but I did notify you on YouTube, and we saw that downturn. And I told you to really pay attention to this level right here, about 246, right? Right in this area where we saw a test here, we got rejected, we came out of it, we closed back below it, we see that selling come in, we test it again. Once we're able to break through it, we see some positivity, we retest that area, we head a little bit higher. So we're testing that area as of Friday, so we really want to pay attention. I do believe Tesla has the opportunity to bounce a little bit higher, but maybe it does want to break down a little bit more before it happens. So we want to pay attention to this. Right now, you do have that crossing on the MACD, so it's something to pay attention to. And if we do see further selling in January, then Tesla will end up suffering. So if Tesla does get some kind of dramatic selling down in outside of this this wedge that it's in that I have here, really be looking for this area of 231-ish, because that's going to be very important. If we start to break below that level, you do most likely have the opportunity to come down into the bottom side of that big triangle that Tesla has been in. And Tesla's a good one to point out because you see how close it is to that weekly center line on the MACD. Okay, so we're really, really close to that center line. You can see the last time that we got into negative territory, what happens? Well, we see dramatic selling. We touch that negative territory, we get some dramatic selling to get there, we get a big bounce, but then once we get into that negative territory again, we see a big drop. We get into that negative, we try to get back out of it, right? But we go back into it right around here, and we see a dramatic drop, and that's really why it is important to pay attention to that negative territory on the MACD, not just the divergences, but if the MACD is actually able to get into negative territory, that's when you see dramatic selling come in. So it is a time to be cautious because we are really close to that center line, and we just saw some selling as of Friday. So we want to pay attention to this on all of our stocks because they're really close to creating negative trends on a weekly scale. NVIDIA is a little bit of a different story, right? We don't necessarily have that divergence on the MACD, but we do have that divergence on the RSI. So this could just be some kind of pullback. Where could we head to? I really like this zone down in here. I've talked about it for a little while now, 422. And if we do see that dramatically get to there, and then we produce earnings and things like that, and then we get the rate cuts narrative coming in, you might see this actually push higher, cross on its MACD, and give you that weekly divergence later on. So that is something to pay attention to. We can see on the daily side of things, we actually have that divergence right now, and I think we have a good chance of, well, it's not necessarily divergence. We really almost tested this high. So how divergences work, how the MACD works is it actually calculates the closing bar. So technically this divergence isn't here, even though you pretty much have like almost a double top at this zone. So you want to pay attention to that, but if this rolls over, you're going to get into negative territory. So you're really hoping that that doesn't stay there for long. I think we do have another push possible in 2024, but I'm open to all scenarios. I really think we could base out around this area with some kind of ABC pattern. So I just want to see where that could land us as of, this bar here. And really, I would say probably we are going to head to that zone at this point, test this low at the least, and then we could see what happens from there. So do we make that all-time high first and then see some kind of drop and then get that extension? Or do we see that all-time high first and then we get some kind of downward move? So we want to make that point as of right now. It's a time to be cautious. You do have that daily divergence. You don't have a weekly divergence on both the MACD and RSI at the same time. So it's just something to really pay attention to going forward. I do believe that NVIDIA has a good chance to go above 507 in 2024, but I believe that that will be enough to take a lot of the bears out of the market. Bulls thinking that this is going to be a new bull market. If you wanted a new bull market, you wanted more structure going up. The overall takeaway for the entire week is we are seeing a lot of signals that could mean there are big downturns in the next few years, in the next year. So we want to pay attention to that. Now, those things can take a lot of time to play out. So we want to really focus on reacting to price and not trying to go with our exact predictions because it never plays out the exact way you want. So pay attention to price and react accordingly. And I believe that being cautious is the overall message for the past week. Thank you so much for watching. I really do appreciate it, and I hope that this video was helpful. I hope you guys have a great weekend, and I wish you guys all the luck in the world in 2024. Join me back on Sunday for all of that information that we're going to give out for the week ahead, and have a good night.